The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 20th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Tuesday. Let's make sure that you and I do everything we can to have a wonderful Wednesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little shift out there, that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. You and I, we're going to go take a look at the circumstance of the markets. We'll go see what the bulls are doing, what the bears are doing, and I'm absolutely grateful for your presence here this morning. Now, I'm here to serve you, so feel free to dial on in at 877-927-6648. We can talk about anything. It's a quiet market out there. We'll try to find some lively activity. Of course, internationally, you can also reach out to us at 727-445-1044. This is a wonderful Wednesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow futures up 21 points, trading out at 18,305. S&P futures up 1.25 at 2125 and change. NASDAQ futures up 6 points, trading at 4507. Russell 2000 up a couple points at 1257. U.S. dollar index relatively flat this morning. A little bit of movement in the Great British Pound. We'll take a look at the currency pairs. We'll look at the hard currency pairs. We'll go take a look at Goldilocks right now up about $3 at 1209. Silver up 9 pennies at 1716. Light sweet crude up 69 cents, trading at 58.68. A quick peek across the globe. We're going to find that right now over in Germany, the DAX, which had a extraordinary day yesterday, breaking out of its descending price channel. It's off about 51 bucks. Let's take a quick peek at the DAX, trading at 11,802 as we speak. No big deal. When we take a look at the chart out here, when we look at the DAX, a big move yesterday, huge move yesterday. You know, I don't know what the volume is today, but not, nary a retracement as we speak at this moment. If we take a look at the FTSE up 4 points, so we got a flat session out here. All that we really know about the FTSE is that it just simply continues to trade above that 1999 consolidation breakout at 69.50. Over in Asia last night, we had the Shanghai. That was up 29 points out here. The Shanghai, actually, if we take a look at it, I'll blow this up on our chart here. Let me get rid of this, some of these retracements out here. Actually, let me get rid of, do I have to do that? Yeah, I probably do. I'll turn it off. Let me do this. Give me a moment here. Then I don't have to come back in here and redraw it. So give me a moment to turn that off. If we take a look at yesterday's candles, kind of an interesting one. Let me see here. Was this a key reversal session back here on April 28th? So the low 46, 45, 18, 46. It was. Okay. So here's the setup with regard to the message of both the bulls and the bears. Take a look at some Japanese candlestick charting out here. Actually, key reversal session is not a Japanese candlestick terminology. It's a Western term out here. And if we take a look, what it means is it really only happens, a true key reversal only happens when three things are present. You've got to be in extended condition. In this case here, if we take a look at the relative strength indicator at the very bottom of my screen, it was absolutely in an extended condition. So we got that out of the way. Secondly, you have to have the prior day's high and low exceeded. Well, that actually happened on April 28th. And then thirdly, you just need one tick, one penny close in the opposite direction of where price was coming from. And that qualifies as a key reversal. So they typically have meaning. They certainly have meaning with regard to a market being tired. Now, we know in this case here, the Shanghai was extremely we won't say tired. It just simply was extremely extended. So it wanted to take a little bit of a rest. Now, its retracement was the most bullish possible thus far because it didn't even make a 0.382 retracement, is my recollection. I'm not even going to go take a look at it. Even if it did make a 0.382 retracement out there, that still shows you tons of strength out here. But yesterday, as price moved, or this morning, last night, I should say, early this morning, our time, As price moved up into that swing point from April 28th, you actually got another bearish reversal signal. So it says that the sellers are really inside the Shanghai. They really camped out in this 47.60. Now, you get a close above that high from April 28th, 47.91. Whatever sellers were there, they just simply will have been trampled upon out there. And that's really the message of the Shanghai. If we go take a look at the message of the Hang Seng, off 108 points last night. No real big issue out here with regard to it, just sideways movement, so nothing really to talk about there. In the case of the Nikkei, as we mentioned the night before, was going to go make a run for its highs. It did that last night. It got up into that April 23rd. Let's see the high, 22.52. The actual high last night was 22.78. So it actually exceeded that, right? Was it? Yeah, exceeded that. Drop back now. This here is really not. It's just the candle has got no meaning whatsoever. So we just know we've got a test of the high. I don't know if it was on volume, light volume, or not, but it simply made it back up to that swing point. 100% move will move. If it can't take that over, price can easily continue to consolidate between the 19,300 area to 20,200 or so. And that's what's going on there. Now, let's go take a look at our markets out here. What happened to those days when the markets would be up 100 points, we'd come in and then it would sell off, or down 100 points and we'd come in and the markets, the buyers would jump in? We don't have those days as we speak right now. If we go take a look at what we can find out about the markets, let's start off and take a look at multiple time frames. I don't think John Logan was on this morning. So let's take a look at profiles and patterns out here. And let's start off by taking a look at the NASDAQ futures. Now, if you're watching us on TigerTV, my screen in the upper left has got the 30-minute chart. In the upper center is the 60-minute chart. In the upper right is 120 minutes. To the lower left is 240. In the center on the bottom is your daily chart. And the bottom right-hand corner are the weekly charts. That way, if you're following along and you're trying to identify what the market profiles are, the market profiles just simply being where supply and demand is and where price is most comfortable in trading. If you take a look at that 30-minute chart out here inside the NASDAQ, it tells the story of this sideways action that basically is traveling between the 45.09 and 44.98 level. In fact, you move over to the 60-minute chart inside of the, now inside the 30-minute chart, you can see that the spread between the resistance level, that 45.09, and the support level at 44.98, because of where that light blue line falls, that price is basically evenly distributed with regard to bulls and bears out here. A little bit different story if we look at the 60-minute chart. 60-minute chart is more favoring the sellers. That says at 45.09 is a key level to watch. Just like we took a look at getting above resistance on that key reversal session in the, I think it was the Shanghai out there. If you get above that, that tells you that whatever sellers were out there just simply got stampled upon. So that is pretty good. If we take a look at the 120-minute chart out here, we're going to see support at 44.99. So we know that we've got really good support in that 44.90-ish range out here, just along the top side, the top row of my set of charts here for the NQ. If we look at the 120-minute time frame chart out here, and I'll do this for each of the 120-minute time frames, we can see you've got a nice little rising price channel that is still in place out here. Not until we actually see a break, and we're not even anywhere near down to the bottom of that level. What would be the bottom price? I don't know, somewhere around 44.65 in that area. It just depends on which hour it is that we would hit it. But you can see 44.99 is a pretty good level of support. Now, in the case of the 120-minute chart versus the 60-minute, 120-minute chart is actually favoring the bulls out here. So we've got different messages for different time frames. What we do know is this 44.99 area is good support. Your break below that says you've got lower price running at you. Where could lower price take you to as we take a look at these charts? Well, inside the 240-minute chart, lower left, 44.93 is the real number. So let's use 44.93 as the break that you need below that area. If we see a close below that, you could run down to that 44.62 area. That is what is showing as your profile resistance. Old resistance should become new support inside of the daily chart out there. So that's what's going on inside of the NASDAQ. If we go take a look at the Dow futures, let's go take a look at it. Do I have that? Yeah, I've got that up here. As we take a look at the Dow futures, let's do the same thing out here so we can get a feel, because we're going to have different messages, quite frankly, for different vehicles. Now, again, in the upper left-hand corner, you got the 30-minute chart here for the Dow. Let me explode that up for you. What we can see out here is just simply that price is above a resistance level. Not the case inside the NQ. So is it the Dow that's going to move things higher or lower, or is it going to be the NASDAQ at this stage? I don't know the answer to that. I'm going to go with the NASDAQ at the moment. But what we do know is that the Dow at all-time highs. When we take a look at a 30-minute chart, it's up above resistance. 18,293 is that number. On the 60-minute time frame, it's up above resistance. 18,291, and it's broken above that during the last 2 hours worth of trading out here. However, if we take a look at that 120-minute time frame chart, just as we were looking at a rising price channel inside of the NASDAQ, guess what? What's interesting about this chart is the Dow futures on the 2-hour time frame. They've actually broken through the bottom of that rising price channel. Now, the way that it's broken it is a move sideways out there. Never floats my skirt up. I don't know about yours, but never really floats my skirt up as a real break of a rising or a descent. But you still have to pay attention to it. Out here, hey, maybe it's just simply tired. It's moving sideways. It's going to wait for ketchup. When I say ketchup, I'm not talking the tomato with the sugar kind. I'm just saying waiting for the NASDAQ to motor on higher out there. That's a possibility. But right now, what we do know about the 120-minute time frame chart is price inside the Dow futures have broken that rising price channel, trying to get in, haven't been able to get in. And even if they do, they've got resistance at 18,334. So as we get to the longer-term time frame out here, 240-minute chart also shows resistance at that 18,334-ish type range out there as well. With regard to the daily and the weekly, any type of real pullback, you got to say inside of the Dow futures, you're looking at support around 18,250 or so out there. So that's the message there. Let's go take a look at the Russell 2000. Oftentimes we leave that up. Now, the numbers you're going to be looking at on my screen, we've got actually all these numbers are just slightly delayed out. That's right, because I've got this string of contracts that have moved to that have in order to have maybe a better set of market profiles on all these time frames, I'm using the delayed version of these market profiles. But that's okay. Still, the numbers to be paying attention to are what it is that we want to be focused on. Inside the Russell 2000, on the 30-minute chart, prices in bullish configuration, the same in the 60-minute chart out here. And the 120-minute chart, not so much. You've got a resistance right around this 1257 level. The same thing on the 240-minute chart, lower left, 1258 out there. So that's really resistance. We'll call it inside the Russell 2000. Any move above 1258, we see a run higher, probably run higher into the highs out here. Those highs being the trading day of April the 15th out there. And that is the message of the Russell 2000. Let's go take a look at the ES Mini out here, go see what its numbers are. In fact, we'll probably have to do that when we get back from the first break out here. But we'll take a look at the ES Mini. Let's go take a look at silver and light sweet crude as well when we get back. On the ES Mini, though, on the 2-hour chart, here's what we can see. Little rising price channel out here that just like the Dow has broken through it to the bottom, the S&P 500 has not done so thus far. Right now, we got, as far as the futures are concerned, we've got Dow futures up 21, S&P up 1.25, gold up 260, silver up 10 cents. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, in the pre-markets here. Those of you who are holding UVXY, you might think he had a big bonus out there. Closed at 823, right now trade at 40.95. Wrong. That was a reverse split. It looks like about a 5-to-1 reverse split out there, so that's all that's going on there. However, Sarepta Therapeutics, SRPT, is a ticker symbol. I did close at $16.38, trading at 23 bucks right now. Let's take a quick peek at this. This equity here, did this ever come all the way back to its breakout? Let me see. It most certainly did. How about that? Well, wait. I got to pull this back further. I think I got to go back. No, its original breakout took place back here in July of 2012 when it went from about, I don't know, $9, $8 or $9, I think. No, it went from about $4 to about $9. And then the real big breakout, that took place out here in October, which it's below, by the way, came back into that area. It's trading just above it as we speak right now. But nonetheless, what is this equity doing? I said trading right around 23 bucks or so. It's got this gap down, so it's going to try to deal with the supply line that was created on October the 24th and 27th out there when it gapped down with 15.7 million shares. So we'll see if it can close that level of resistance. The real strong area of resistance inside of Sarepta is going to be at 24.92. That's really the area that it needs to clear in order to start going and running after this high volume high out here from April 21st, 2014. Let's go back into the market profiles and the boxes. Take a look at what's going on inside the ES Mini. So I did mention that the S&P futures contract gets pulled back to really support levels of two things. One, you've got your market profile low. That's at 21.22. That area was hit here between 4 and 6 a.m. That level held as support. The way that the box is set up, it's actually set up for the buyers who have control of this range as we speak right now. So any close below 21.22 would be a break of that level of support as well as the rising price channel. At this stage here, you have to say that the possession of the market is in the hands of the bulls as we speak. They've tested support and they have held support. On the 4-hour chart, nothing out here that suggests anything else other than that buyers are the ones really in control, with price just really closing out at that point of control, that 21.23, where they are most comfortable with price. So really on the S&P futures, 30-minute, 60-minute, 120-minute, 240, all of them are in bullish formation as we speak right now. Hey, that could change in 3 minutes time, but that's what we're looking at. If we take a look at silver out here, high-ho silver, that was trading up, maybe about 9 pennies or so. Again, I've got a little bit of a delay out here. But if we take a look at silver, let's look at the 120-minute time frame chart here for silver. If silver were to continue moving south, it looks like this is a pretty decent rising price channel that it was in along the bottoms out here. So if silver does continue to pull back, the area that we want to monitor is probably in about the $16.80-ish area. Right now, the message of the 120-minute chart is that it wants to go ahead and motor on higher, at least make a retracement. A big move down inside of gold and silver yesterday. In fact, if we take a look at the two, here is on the left-hand side, here is the June contract for gold, and we can see that it moved back. It's trading below really the longer-term market profile out here. It looks like that was probably around the 12.10 area. The pullback yesterday inside of the GDX, pretty substantial volume out here, 45 million shares. Now, when the GDX broke out on May 13th, it was 48 million shares. So, you know, is that light volume? Yeah, but really... you know, you're pulling back with about the same type of volume. Great buy setup on this could be around 1947 out here. So we'll see how that trades today, and that is inside the GDX. As long as gold can hold 11.99, hasn't tested that area. As long as it can hold that area, the march higher should resume. Whatever march higher there is, because it really hasn't been able to break much above that 12.25 area. But it does say to me if it can hold 11.99, then that march higher can most certainly continue. Let's do one last look at the multiple time frame charts out here. Let's go take a look at light sweet crude, see what its setup is out here. Now, in the case of light sweet crude, it should have support around the 57-ish area, 58.17 right now. If we take a look at that 2-hour chart, and the 2-hour charts out here, this is where I've got all of the different rising price channels. We can see that in the case of light sweet crude, that move off of the bottom back on March the 18th, that this level has failed. So maybe we've got further retracements inside of light sweet crude out here, but it's going to have to break that 58.17 area in order for that romp lower to continue. Right now, we've got Dow futures up 25, S&P up 2. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow off 17 points, trade at 18,295. S&P up a couple points at 2125. Composite off 5 at 5,064. The Russell up a point. DAX off 30. FTSE's up 5. Gold is up 250. Silver's up 12 pennies. Light sweet crude up 75 cents. Leading the charge to the upside, it is Dycom Industries up 14%. That's $6.50 there. Sarepta Therapeutics up $6.50. Time Warner Cable up $5. Auto Live, ALV, that's up 3%, up $4. You've got Computer Sciences up $1.81. Pep Boys up $1. To the downside, Etsy Inc. I think of all of them, of all the, let me see what this thing has got to be trade. Nobody's got to be in any kind of winning position inside of Etsy, are they? No, they're not. This one, I think, of all of the IPOs that are out there, is going to be the scam of scams. Because those numbers that those guys were coming out with, and they were talking about, it was Yeah, I didn't buy into it, not for a second. Not that I would have bought into it, but I think this one here is going to prove to be just an app. So, scam's not really the right word out here, but it's not what it was being touted as. If you take a look at also moving to the downside, we've got Lowe's off 360, Amazon down a couple of bucks, Norwegian Cruise Lines off a couple of bucks out there. I guess parking a cruise liner on a reef yesterday or so. So that's I don't know if they've gotten off that reef or not. Ctrip.com off a $1.47 as well. So we've got some movement to the downside inside of the market off of the bat, but wait till the Fed minutes come out. We'll see what goes on there if the move is real. Again, we'll just take a look at these support levels out here. We'll see if they hold. You are beginning to see a break right now as we speak of that rising price channel inside of the ES Mini. But again, it's a 2-hour chart, so you've got to really wait till the 2-hour time frame here ends. And we'll see what happens there. But let's go take a look at the currency pairs. Let's go see what we have going on out here. Let's take a look at the euro versus the U.S. dollar out here. That, as we know, went ahead and I don't need to know that. There we go. And this moved back into the descending price channel out here. Where is this headed to? Excellent question. All that we can really do at this stage, well, we always use our swing points as our guideline. So that says you can always make it back to the April 13th low, 100% move. That's its message. Until that time frame, though, we want to take a look at retracement. So what we know about the euro versus the U.S. dollar is that it's made the 0.382 retracement. Now, it did that yesterday. In essence, it's trading right at that level today, $1.10. And but it made that yesterday with a fairly wide-ranging type bar for a daily. For the daily bars out there, really does say that $1.08 is likely the next target. That is inside of the euro. If we take a look at the euro versus the Japanese yen, that too pulling back. Now, right now, it's just kind of a little doji candle, so it hasn't done much. But this pulling back should continue to put directional pressure on inside of the U.S. market. So I mentioned the Great British Pound had been moving earlier in the day, but as we take a look at it, just an inside day as we speak right now. So it's not giving us any message other than an inside day that actually wants to continue with a further retracement lower. Now, what would that be out here? We got a couple of different ways to look at it, but the 0.382 retracement at $1.53, 1.533 is likely the target, at least the initial target here for the Great British Pound versus the U.S. dollar. So we've looked at gold, we've looked at silver, we've looked at the currency pairs, we've looked at Texas tea, we've looked at the futures markets out there. We've covered quite a bit. Let's go take a look at what's going on in some of these stocks here that are popping and dropping. Let's take a look at the Guggenheim Solar ETF. I do like the ticker symbol out there, TAN. But TAN is moving to the downside. No idea what is inside of TAN, which solar companies are inside there. We'd have to go take a look and figure out, because then we could figure out which solar company it is that's moving it to the downside. But gapping down this morning, 266,000 shares out here. I don't know if there's any currency conversions or what's going on. I don't think so inside of this equity, but I'd have to really look more into TAN, the Guggenheim Solar ETF, before I could give you any real good read on it. So I really should have put it up to the top, right? Let's take a look at Lowe's, though. In the case of Lowe's, there's plenty of information out here. Looks like their first quarter results missed their estimates. But that's okay. They can just simply buy back stock out here. Comparable sales were up 5.2%. So they must have been looking for something more than that. But, hey, that sounds pretty good to me. Excuse me. A little water break there. If we take a look at lows here, gapping down into a high volume low out here from the trading day of May the 1st, May Day. And that low is 67.60. Has not hit that low as we speak just yet. It probably does. If Lowe's is able to break through that, close below 67.60, do with more than 9 million shares, already in 2.4 million shares today, so it can do it. If it doesn't, you've got an A to B equals CD to the downside. That'll take you back, looks like take you back into the breakout area where there was a sign of strength out here on November the 19th. If we take a look at that A to B equals CD down pattern, let's go see if it actually lines up with that move out here. Not saying that's going to happen, but because it's got to break this B point first. But if ever there was a opportunity to do it, now and today would be that day. That would be a 1 to 1.618. A to B equals CD to the downside to get you back in that breakout of 58.70 or so. That is ticker symbol LOW. Also moving to the downside out here, you've got, just looking percentage-wise, Evine Live. What is that? Evine Live reports first quarter results. Well, apparently they're wishing that they did not report first quarter results because it's down 50% or so. Closed at 570. Right now, trade at 330. So I don't know what this company does, but what they looks like they've done is taken a lot of shareholder money out here. So the shareholders inside this equity cannot be too happy. Oh, I take that back. It hasn't taken everybody's money. But nice wide-ranging bar with that gap down this morning. Pretty good chance it makes a run into the $1.60 type area out there. Got to feel bad for somebody that was holding it from not too long ago, just a few days ago, in about the $7 type range out there. EVLV is the ticker symbol out there. To the upside, let's go take a look at what's moving to the upside. We've got Dycom Industries. Dycom Industries up $16, up $7.50 out here, $7.77. I saw going across my screen just a moment ago. That is taking out its most recent swing point high from April 13th. That had 1.1 million shares. You've already done a million. So this looks pretty good. Looks like all-time highs. Let me just confirm that for you. DY is the ticker symbol out there. What the heck? Did I get to the weekly? No, I don't think so. Maybe I was on the weekly. I was on the weekly. Son of a gun. How did I do that without even knowing it? Okay, there's our gap up. So I was on the weekly. So it's taking out the weekly with volume out here. Nice gap up, but interesting. Could actually be a 3-gap play out here. So Dycom Industries looks like this gap is larger than the gap from the trading day of February 25th and larger than the first gap, a sign of strength that began on November 25th out there. So not say it's in play is what it is. And if we see if for some reason Dycom Industries sees a gap down, gives you an island reversal at all-time highs with a 3-gap play, actually says price could pull back into the $26 area. I'm not saying short this stock. I'm saying it's something that you'd want to put on a pad of paper and pay attention to because it does have that 3-gap play look to it. Sarepta Therapeutics, again, let's go back here, see what it's doing, up 40%. We identified where that level of resistance is. That big supply line is really going to be at that $24.90 mark out here. You're trading at $23 with good volume behind the move. 3 million shares behind the move so far, going into a supply line with 19 million shares. We'll see if you can get above $24.90. Today is the day that it would want to do that. Also moving to the upside, Time Warner Cable, TWC, is the ticker symbol. That's up $5, up 3.5% out here. Looks like this is taking out swing points. Let's put this on a weekly time frame here and see if it is. In fact, it is at all-time highs out there. Back to the daily chart. So you've got Time Warner Cable. This is up above its most recent swing point, which would set up an A to B equals CD. That's April 10th high, which was at 161.14 or 163.41. A little dyslexic on the last 2 digits there. Volume of 3.2 million shares. You've done 1.3 right now, so it looks like it has the gusto to go ahead and make an A to B equals CD. If, in fact, it does that, your price projection inside of Time Warner would be, well, yeah, let's take it up into the price point of, Johnny, the number, please. 172.37 for TWC, Time Warner Cable. Also moving to the upside, let's see here. What do we got we haven't looked at? Let's look at Agility Holdings. EGL is the ticker symbol. It's flying with the Eagles this morning. It's up, trading out at $29.53, 240,000 shares behind the move out here. Where is this headed to? Well, I don't know where it's. I know where it's going to run into trouble, and where it's going to run into trouble is double trouble, is right around $39. Now that's a pretty good move off of where it's at right now. That's another $10. That's another 30% or so out there. Not saying that's where it's going to move to, but if it does, that's where it runs into problem. EGL is the ticker symbol. Dow's off 24, S&P's off 4. Composites down 16 points. Let's take just a quick 15-minute peek into the summation index, see what we see out here. Ooh, today going to be an important day, especially after the Fed releases its minutes. Of course, you and I both know that these charts here don't mean a hill of beans until you get to that 4 o'clock time frame. But we do know that the New York Stock Exchange, as we speak right now, under pressure, price oscillator is down below zero. I've had a few emails asking me, what is that price oscillator? It's really fairly simple. It is the difference between two moving averages, the 19 and the 39-day exponential moving averages. And that is really what the difference is. The meaning behind it is that when the price oscillator is above zero, it is telling you that the buyers are in control of the market. And when it gets below zero, it's telling you that sellers, in essence, are in control of the market. There's many other readings. Once you familiarize yourself with it, it is an excellent tool to understand when breakouts are underway, likely occurring, so that you can make trade adjustments in it. In the case of the NASDAQ composite right now, it's just testing the zero line, but any close below that, as well as the New York Stock Exchange today, look, if all three are below the zero line out here, because the right-hand side of my screen is the Dow, that is typically the signals the end of a move. Does it have to? Can something happen the next day? Of course something can happen the next day and in the next moment out here, but it's not a good sign if you see all three in unity below that zero line out there, and that is with regard to the Dow. So we'll see how the market closes today. That's what's going to be most important. But as we speak right now, you got one testing support, one underneath support, and the other just simply headed to the downward side. Now, in the case of the VIX index, trading out at 1314, 1391 is our another 50, 91, 20, 70 cents higher or so short. It's what it would be 67 cents if we were going to be exact out there, cents higher in order to get to that 50-day exponential, all important 60-day exponential moving average, and that is inside the VIX index out there. Okay, so we've covered that. We've covered gold. We've covered some of these stocks moving and grooving, and I got 2.5 minutes to keep you entertained out here. Maybe I should do the old soft shoe. Who was the old soft shoe? Was that Al Jolson out there, or was that somebody else? Am I just making something up or thinking something different? But Stevie can do the old soft shoe with you. But I know you really listened in. You don't want to see me do the dance. You want to see me give you some input on what's going on inside the market. So we didn't take a look at, I mentioned the GDX earlier, breakdance. No, I can't do the breakdance, but I can do the old soft shoe. If we take a look at the gold market vectors, gold miners ETF, you try saying that just 2 times in a row really fast out there, and you'll see why I stumbled over those words out here. Trade out at 2015. No real big move or anything inside that. Let's go take a look at some of the individual stocks and see what we can see out here. Let's specifically go take a look at Rand Gold. GOLD is the ticker symbol inside day there. Not doing a whole lot. Final numbers yesterday, gap down with 607,000 shares into this little hammer style type candle from May the 7th that had 655,000 shares. So pulling back with, unfortunately, light volume. Well, I can't say unfortunately light volume. I can say pulling back with light volume, but you're moving into a swing point with volume out there. Really does suggest that the bottom of that could easily be tested, and that is $72.09 out there. That is on Rand Gold Resources. Gold Corp out here up 17 cents right now. What did it do yesterday? Down with 9.5 million shares versus 10.8 on the way up. So, you know, sort of moving down with light volume, but still way too much. Says that 1791 area likely becomes a target. This has really been consolidating between about $18 to $20 and a change out here. Of course, that would be a nice trade in that 1791-ish type area, because any close below 1753 and you'd want to be out of the equity, or you'd be wanting to go ahead and write it down to the lows out here from October 31st at $17 and a penny out there, and that is ticker symbol GG. Dow's off 24, S&P is down 4, composites off 18, Russell down about 3 points. That was Stevie's old soft shoe when it came to technical analysis of the miners. This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 22, S&P off 3.5, Composite down 15, Russell down $2. So let's go take a look at today's opening range. Today's opening range sponsored by the 9 a.m. to 9:30 30-minute session out here. So as we take a look at that, we're just really looking for the highest high and the lowest low during that time period here. If I switch this over to a 5-minute chart, maybe I'll do that. Maybe it looks a little bit like we've got more bars out here, but just to show you what that looks like out here. So on our 5-minute bars, that says that right now price is really traveling with inside the opening range. The opening range during that first half hour. Any move below 2119.25, that would be bearish and would suggest a move lower. You'd say a move lower to where? You know, I would say that as well as any type of move above 2126.50, price moves higher. We can take a look at really both levels where price moves to, but that becomes the real range of the real battle of the day. If there's going to be any kind of momentum to one side or the other, you'd see a clear breakaway from either of those two areas. Otherwise, we just simply have a fairly decent range, by the way, today, 2119 to 2126. So you've got a nice 7-point move out there. With regard to where is it that price could pull back to inside the ES Mini, you know, 2119 is going to be a level where it needs to break through. So what did I go back here? And 2119 versus what, 20? So 2119 is really a key area. If you break below that, so let's just say that the market does not respond well to the Fed minute release at about 2 o'clock or so, then you're looking at potentially move down to 2099. But I say the level that's got to be cracked is 2117. You crack 2117, that'll bring that 2099 area into play. Otherwise, could just be a lot of sideways action between 2120, 2119, and 2126. Folks, if you're off to start your Wednesday, have a wonderful day. Stay tuned. Hour 2 of the Trader's Edge is up next. And, of course, our fearless leader, the one and only Tom O'Brien. He'll be up with his Market Minute in just a few. Take care and have a great Wednesday, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.